Hey everyone, it is Tuesday, 8:30. I think it's Tuesday, the day after Labor Day. Welcome to Capital Advantage Tutoring's live Q&A on any of the FINRA exams, any of them, SIE exam, Series 7, Series 6, 63, 65, 66, the Series 57 if you want, Series 24, any of these exams we can get questions on. If you are looking for materials, please go in my descriptions. And Achievable does the SIE and the 7, and STC can do all the exams, including all of them. Ginger, how are you? Judy, how are you? If you like what I'm doing, hit like and subscribe, and we'll go from there. Please subscribe. I'm getting close to it. I have almost 1,900 subscribers now. We're trying to get it up there. Okay, so hopefully Greg's coming on. Greg, who's been a very active member of this for the last month or so, he passed the 7 on his second try on Thursday or Wednesday. And he didn't come on because he said, Shauna, how are you? Because he said he was a little drunk. It would have been much more fun. It would have probably been a lot of fun if he came on when he was drunk. It would have been a lot of fun. So we'll see if he gets on. Okay, everyone. I just found a really cool thing in STC that I didn't know about. And again, if you use them, that's great. If not, you don't. Oh, somebody asked me a question on here, and hopefully they're on again. The crunch time facts that I mentioned are STC has their own version of what they think is on the exam. So the crunch time facts are based, it's not what's on the exam exactly, wink, wink, but it's a lot of the stuff that probably is on the exam, and it's a really good thing to look at. Secondly, Notman has their version of the same thing called class summary. But hey, Savoy, how are you? Glad to talk to you the other day on the phone. So now, what's interesting is that one of my students pointed out today that if you go into the STC thing, there's a on-demand thing, and it says view. If you go to the top right, there's a thing called documents. Jessica, how are you? So what happens is you click on documents and opens up a little not a PowerPoint thing, but like a consolidated version of the book. It's really great that after you've read the book once or twice, you can just keep reading that over and over again. So again, I'm not forcing you. Everyone, you can use whatever vendor you have, and you will pass. JT, how are you? Thanks for coming in. Okay. So now, if you are needing materials, feel free to buy them. If not, if your firm is paying for Kaplan or you can find a discounter for Kaplan, go there. It's okay. I'm just letting you know that if you use the STC link here, you get a discount. And if some people said they don't see a discount on there, they call me and boom, they put it on. And they had Bert, how are we feeling? Okay, test on Monday. This is a big week. So how are you handling this week? Go from there. Okay. So I just dropped a video called Reg BI. Savoy, how are we feeling? Everyone. Okay. Now, I just did a video. Oh, Jessica, so how are we feeling? You're going to be fine. SIE or top off? Which one? I just put a video the other day called Reg BI. It's short. It's not like if you were like a compliance officer, it's not enough. But I'm giving you enough information for to pass the exam on the little stuff they do on BI. Okay. So how are you scoring, Jessica? How do you feel? Where you're weak? So Savoy, oh, thanks. I appreciate it, Judy. You always think everything I do. You always think everything I do is pretty good. I'm happy you do. I'm very happy that you do. But okay. So Savoy, 79, 82, 79 on the green lights. I think you're perfect. I think you're in good shape. Now, what you do is everything. Okay, what sections are you struggling with? Okay, 60 to 8. Okay, so why are you getting 60s? Is it because of the math? Is it because of the little details? If it is, don't worry about it. And I ask everyone the same question: what happens if you fail? Do you get another shot? Go from there. And if you don't pass tomorrow, let me know. We can always set up a session. I don't push that. I'm telling you, I do this because I want to help people. If I get students out of it, it's a bonus, but I don't push for that. And I get a lot of people who say they don't even look at my videos sometimes because they think it's a crap. Like a lot of times it's just clickbait where I get you to do it and I'm selling. You ask me any question on these exams, I will answer it. Other than I'm not going into options because again, that is my moneymaker. So now, awesome, Mark. Okay. Nervous is good. So Jessica, okay. Options mostly. Okay. So you got to go over the suitability. You got to do that. You got to do it. Got to do it. Got to do it. If the options, so I'm attacking Jessica right now, not attacking, but going, okay. Yeah, I can do that. It's not that big, but yes, I can do that. So now on the prime broker. So Jessica, if you understand the basics of options, like why you would do it, like, Mary, we got this. We'll get this. You're going to nail this. So if you can tell me if I'm long stock, what options I do. If I'm short stock, what options I do. Which one's speculation, which one's income, and you can do the basic math. The problem with Kaplan and all the vendors, just Kaplan and Past Perfect, a little worse, that their option questions are ass kickers. Like they actually try to screw with you. But if you do a question on options, like Jessica, you've done questions, obviously, and don't stay up late. You shouldn't stay up late. Just relax, okay? If you get the basics of options down and you can do them without the really tricky stuff. Like say you see a question and you go, oh, I knew it, but they asked some twist on it. I wouldn't worry about it too much, okay? It's, they're not really tricky. I am telling you, even most of my students, most of them say that the options are very straightforward. Look, I suck at math. And I don't get any option questions wrong. And I just know the biggest thing is, can you get break even? Can you get max gain, max loss? Can you get profit and loss? And do you know why they do them? If you can do that, you should get through. Can you recognize the difference between a debit spread and a credit spread? Can you differentiate between a spread and a straddle? A lot of that comes down to long straddle, short straddle, stuff like that. Okay. Again, I did the Reg BI video. Watch it. It's 10 minutes out of your life. It's not going to kill you. Okay. So Savoy, that's good. So what are you doing? You're taking the exams, and then what are you doing? If you're just taking exams, it's not helping you. If you're going to take an exam, you want to take it on, look at the lowest sections, reread or watch the videos on those sections, or like Robin said, she said the videos are painful. It's harder than that to read. Okay, review the questions and any question any section that you're doing bad on, reread the section, not just the questions. Okay. Prime broker, I'll go over in a second. I want to get this stuff out. Okay. Mary, how do you know? Perfect. Okay. Okay. So, okay. I'll see what I can do. I don't really like doing the option stuff on this, but again, don't go too crazy. Okay. Now, okay. JT, a prime broker is this. So if I'm a hedge fund, okay, I have multiple broker dealers that I let execute my trades. So I may have ABC and I have PDF and Dewey Cheatham and Howe, all these different broker dealers that I deal with. Okay. I actually buy and sell with them, but I don't want to keep moving my positions from here to ABC. And then when I sell it to PDM. So what I do is I set up a deal with like a prime broker, like a JP Morgan or a Morgan Stanley or a Jefferies, who handles all my money, all my margin, all that stuff. Everything's in this like wheelhouse, this warehouse of a broker dealer. All my money, everything's there. And I can have multiple broker dealers. Kenneth, how are you? Okay. Miami, I love it. So warm days, right? So now, if I set up a prime brokerage with JP Morgan, now remember, this is for the exam. There are other levels of it, but I may have different ones. Like I may have one that's good with my futures executions, some of my equities and some with my bonds. Like Credit Suisse is great with debt. So maybe I use them for my debt stuff and I use like Jefferies for my equities. Okay. Cynthia. So the prime broker, they're setting there. I have all my securities and my money in this one prime broker. And as I execute with like ABC has a DVP RVP account. DVP RVP account with the prime broker. So as they execute, they let JP Morgan know that they bought shares. So JP Morgan sends them the money to buy the shares. And then when ABC broker dealer receives the shares from the person they bought it from, they send it up to Allie. How are you? They send it up to, you didn't call me. You're supposed to call me, I thought. Okay, so now, don't call now because I'm busy. So then the money goes to JP Morgan. So that's what a prime broker, they're making it easier, okay? They're making it easier to execute transactions with multiple broker dealers. That's a prime broker. And they need a net capital of $1.5 million. Okay, so I hope that helped a little bit, JT. I try to help a little bit, so I got to remember to write that down, and that's what we talked about a little bit. Okay, so now, How to remember exempt versus non-exempt? Well, think about this. The exempts are like the federal government. You're taking the 60, is it the 63, Bert? I forgot what you said you're taking. Shh. Boom, boom, boom. Test on Monday. Which test is it? I forgot. Okay. Okay. I'm happy to help. Okay. So if it's exempt I assume exempt, non-exempt is only about 63. Okay. So now, if it's exempts are like federal government, munis. Okay. Oh, the SIE. Ignore the balance sheet income statement for the SIE. You will need it for the top off. Don't worry about this. So here's the thing. The easier to remember for this, non-exempt are corporates, corporate bonds, securities, preferreds. Those are the non-exempts. Now, there are some exceptions to that. So like if it's not a corporation, it's exempt. So if it's issued by a state or federal government, or if it's under 270 days, it's exempt. So a corporation issues commercial paper. That's exempt because it's under 270 days, stuff like that. Don't kill yourself in the exempt, non-exempt. Just remember that exempt securities, even if they are exempt, they are subject to anti-fraud rules of the Act of 33. Okay. Now, okay. So I'm going to give you a little bit of Jessica, if you can get break even, which I hope you can. Remember, break even is always if it's a stock buy, if it's a call, it's strike plus. If it's a put, it's strike minus. If it's stock and an option, break even is always stock plus or minus the premium. Stock plus or minus the premium. So if you have stock and you buy stock and you buy a put, so that means they're the same, buy and buy. So it's stock plus or minus. How do I know if it's a plus or minus? I'm going to do this. I'm going to go, if they're both the same, if it's two buys, I add, or two sells. If it's the same, I add. If it's different, I subtract. So if I buy stock and buy a put, I add the premium to the stock price. If I buy stock and sell a call, I'm going to do the stock minus the premium because it's a buy and a sell. That should get you break even. Now here, I'm not going to go through the whole thing, but I'm going to give you a little bit of a hint. So now, if you can get break even, remember straddles have 2 and spreads have 1. Only straddles have 2 break evens. So here's the deal on this. Other than straddles, the difference between the market price and the break even is most likely going to be your profit or loss. And you just have to figure out what's a profit or loss, meaning that that if it's bullish, anything above the break even is a gain, anything below is a loss, because break even is ground zero. It's nothing, okay? So if you're bullish and the break even is 40 and the stock is at 42, then it's 2 and it's a gain. LV, how are you? So if it's down, it's a loss. But there's one thing I'm going to tell you. So what I tell you right now, if your break even and the market price you're at, if the strike price, and again, I'm butchering it because I do this all the time, but I'm doing it here. If the strike price is in between the market price and your break even, it's now the distance from the break even to the strike price, not to the market price. So as I tell my students, you never cross an effing strike price. So if your break even's 50 and the strike price is 55 and the market price went to 60, you just do 50 to 55. And then you look, am I bullish? Then it's a gain. If I'm bearish, it's a loss. So bullish, anything above the break even is a gain, but never past the strike price. If I'm bearish, if I'm bearish and it's below the strike price, then it's a gain. So if I'm bullish, anything above the break even is a gain, anything below is a loss. And if I'm bearish, anything below the break even is a gain, anything above it is a loss. Again, I'm doing it super quick and not really doing it justice, but since you're taking it tomorrow, that may help a little bit. Just keep in mind the distance between the break even and the market price is going to be your answer. Okay. So again, restricted stock versus control. So restricted may be on the exam. So restricted stock is anything issued like not through the Act of 33. Okay. Jessica, let me know if that helped a little bit. Okay. 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 So now, if I issue shares through like a Reg D, Reg A, something where it's not, not, and if you pass because I helped you, you better share the hell out of this video to everyone you know. Okay. So now I'm kidding. If I have, what was I talking about? Can you believe I keep forgetting what I'm doing? Oh, restricted stock. See, you're seeing a person fall apart live on the air. Okay, so now, restricted stock is if you sell shares or issue shares are issued without the Act of 33, like they're exempt. Okay, okay. Okay, so now I'm happy to hear that. I'm so happy to hear that. Also, you can go on Reddit too and see what some of that stuff. Okay, but not everyone's watching you do this. I have hundreds of people in over the next week or so going to watch this and go, God, he's an idiot. So now, restricted stock. Okay, okay. Restricted stock means that it's issued without the Act of 33, which means then you have a holding period. Most likely you have a 6-month holding period. If it's non-reporting to the SEC, it's a 1-year holding period. But these are shares that have been issued like to a Reg D, which means you have to hold them for 6 months fully paid, and then you can sell them whatever way you want. Control stock is like a POD, partner, officer, director, or a 10% holder of any public company, whether it's registered or not. If it's registered, there's no holding period. And then you just have to follow the 144 rules, okay? So again, restricted stock is stock issued outside the Act of 33, like Reg D, and you have to hold it for 6 months. Control stock is if it's a partner, officer, director, the pods, or a 10% owner owns shares and they want to sell them. It's under control and they have to follow the 144 rules. Okay. Yeah, so that's very true, Cynthia. If you go through the Serious Time Exam forum on Reddit, there's a lot of good SCI tips after you watch all my videos. Okay, so now, Bert, I hope that helped a little bit. Okay. And again, remember, and LV, I'll get to you. And remember, control stock, if it's like Bill Gates is control, Bezos is control, Branson is control. Those are control people of registered securities. They can be control of unregistered, but then they have a 6-month hold and they have to sell it under 144 rules. Do you know what the 144 rules are? Remember this: 144. The greater of 1% of the outstanding, or the 4 weeks trading volume, 4 times a year, which is every 90 days. 144. I love it. 1%, the greater of 1% of the outstanding, 4 weeks trading volume, 4 times a year, which is every 90 days. That does not apply to restricted shares unless a person is also a control person. Okay, so we did this before, but if I buy shares at 20 and it rises to 30, if I buy shares at 20 and it rises to 30, that's our situation. Buy them at 20 and it rises to 30. If I give you the shares, you're getting them at 20, which means I have to pay taxes on every from 20 up. If I buy it at 20 and it's at 30 and I die, I get hit by a bus, and I leave them to you, you get them at 30. So then you pay tax on everything above 30, not from 20. So if it's inherited, you get a step up cost basis. Okay. A step up cost basis. Yeah, the Epic is great. So if it's an inherited, if the person dies, it's a stepped up cost basis. If the person gives it as a gift, you get the original cost basis, which is probably more taxes. Yeah. So if I'm trading in and out, if I'm doing foreign trade, and I go and I'm an exporter, I am worried that the foreign currency will drop, so people can't buy as much stuff. So I will buy puts on the foreign currency because we know that there are no options on the U.S. dollar because we're the shit. We're the greatest country in the world, so we're always a dollar. Okay. There you go. Dying person goes up to heaven. Whatever works. I like that. Stepped up. Interesting. Okay. Now, if I'm an importer, I'm worried that the foreign currency will go up and I would have to pay more for that. Okay. So if I have retentions, say that again. Give me that in a different word. Okay. So now, if I am an exporter, I buy puts. If I'm an importer, I buy calls. So remember EPIC. EP, exporters buy puts. Imported by calls, EPIC, EPIC. Okay. So this is the way I remember. Okay. So record keeping. Okay. Thank you. So this is what it is. Everything is 3 years. Just remember that. Everything is 3 years except for 6 things. Okay. So everything is 3 years. Everything is 3 years. Complaints are 4. And remember big secs. BGSCS. BGSCS. B for blotter. G for general ledger. S for stock records. C for customer records. and S for statements. Those things are 6 years. Think Santa carries 6 big sacks over his shoulder. That's 6 years. So big sacks, BG, SCS. And if it has to do with maintaining, like building the company, like the articles of incorporation of the broker-dealer or the limited liability corporation, the charter, all that stuff is lifetime. So documents of origination, originating documents, which is, it's going to be a lifetime. So if I give a customer the wrong price, he or she has to pay the price that they actually paid. So Jessica, I hope that helped. So again, 3 years, everything, complaints, 4 years, big sacks are 6 years. Anything to do with originating building the broker dealer or the IA would be lifetime plus 3 years. If a customer gives me an order to buy stock and I buy it at 50, but by mistake I tell him he bought it at 49, I have to correct it, and he bought it at 50. He or she bought it at 50. That's called a reporting error. A reporting error, the customer pays what he actually pays. If it's an execution error, which means customer told me to buy stock at 49 and I bought it at 50, that's not on them. That's on me. So I have to give it to him 49 if it traded there. So if a customer gives me a stock to buy at 49 and it trades at 50 and I buy it by mistake at 50, but it never traded at 49, the customer doesn't get it because they weren't entitled to it in the general. So I get a customer tells me to buy stock. I buy it for them. I give them the wrong price. I have to correct it and tell them, by the way, you bought it at this price, not that price. That's on them. And they're obligated to take it. If they give me an order and I screw it up and buy it at the wrong price or whatever it is, that's on me. And if I had not screwed up and they would have bought or sold their stock at that price, I have to give them the price that they would have bought it at. And the loss would go into the broker dealers error account. Not agents and registered reps do not have error accounts. Broker dealers do. Okay. If the client thought he bought it at X, but he bought it at Y, he gets it at Y. So the client gets it at what he gets it at. Now, that won't be an easy conversation. Like if I tell the customer you bought it at 50, but they really bought it at 52, that's a very tough conversation to have, but they cannot get it at 50. They have to get it at the price they actually bought it at. Okay. So also, okay, so Cap M. So for JT, for which exam? So I'm going to talk about Cap M and MPT generally. It's more for the 66, but it's okay. Okay. So Cap M, just think about it. So if you want equity-like returns, you have to take equity-like risk. So that's where we go. The more reward you want, the more risk you have to take. Okay? Okay. Okay. Yes, that's fine. Savoy, yeah, give me a call. So Cap M saying that if I want to say I'm earning 10% and I want a better return, I have to take more risk to get a better return. That's what Cap M is. Capital asset pricing model is straight up just, if I want equity-like returns, I have to take equity-like risk. So if a couple walks in there and they're getting bonds and they want a better return, they have to take more risk. They have to. Now, modern portfolio theory is about getting the new, getting suitability and managing your risk and reward and the suitability. You're trying to find what they call the optimal portfolio. So you're trying to spread, you want to diversify. So I think of it this way. If I walk into your office and I have a shitload of money, hey, David, if I walk in to your office and I have a shitload of money and I want income, your first thought is munis. That's the first thing you're going to think, that you're going to say munis are the rule. Okay, that's what you have to do, because if I'm rich people have what problem? High taxes. Okay, so if rich people pay a lot of taxes, then you want to give them some sort of tax-free thing, which is either like, munis or DPPs or whatever it is. But if you walk in there and go, okay, munis are the answer because you make a lot of money and you want income, that's fine. But under modern portfolio theory, not only does it have to be suitable, it has to fit in their portfolio. So if their portfolio already has, if I walk in there and I have a lot of money and I want income, you're going to say munis. But if then you look into my portfolio and see that I already have 50% munis, you cannot put more munis in my portfolio. That would be too much concentration. And that's what modern portfolio theory is about spreading the risk around and getting the optimal portfolio so that you're diversified and you're getting the right amount of reward for the right amount of risk. Because if I'm too much on munis, I have a lot of interest rate risk. Okay. Yeah, I think, happy to do that. Okay, so now, if you're in the low 70s and you're in the high 70s and low 80, okay, that's awesome that you're moving up, as long as it's not because you're memorizing answers. If you are memorizing answers, then you're probably still okay, but you don't actually know, okay? So if you want to make sure, see if there's any, see if you can find somebody else's questions online, stuff like that. I'm trying to think. You can, if you're using, oh, there you go. Okay, that's perfect. Since it's a green light and you're passing the green light, you're going to be fine. As long as you take your time. You have to respect the exam and you have to take your time. And the best advice I can give you, one, make sure you practice with the damn mask on. You have to. Secondly, you need to take your time and read the question. The best advice I can give you, if I have a heart attack and die right now, the last thing I have to tell you is that if you have to read the question and all 4 answers, okay? All 4 answers, okay? Okay. Yeah, I would say definitely take the 2 hours and take 2 breaks. Take a break every 40, not 2 breaks every questions. Take a break every 40 questions. That's if you are at least doing 45 to 50 questions an hour. If you're doing 50 questions an hour, you are going to 45 to 50 questions an hour. You are going to have a cushion at the end and be fine. And I like the breaks to 40 breaks every 40 minutes, because then instead of taking 135 questions, you're taking a bunch of 40 question quizzes and you're not tired. It's kind of, no, it's fine. So it's the whole point there is that you're breaking it up and you go to a drink of water. But remember, the clock still runs. So if you're not doing at least 45 questions an hour, you can't do that. I'm not saying that's at a good slow pace. That's not super fast. Okay. They're not going to ask you to list of primary dealers, but primary dealers are banks, like big ones, Deutsche Bank, Bank of America, Credit Suisse, that are allowed to work with the federal government buying and selling treasuries. So when the Federal Reserve Board is buying treasuries, when would they buy treasuries? When would the Federal Reserve Board buy treasuries? While I'm waiting for the answer to that, they would buy them from primary dealers. That's what they're doing. They're buying treasuries from the Bank of America, from Credit Suisse, from all those banks. And why are they doing that? But that's who they deal with. And when they're selling the treasuries, they're selling them to the primary dealers. That's what they are. They're not going to make you list them all. You just have to know that they're big broker dealers. Okay. Right. So most times they won't let you go into your locker, but they will. Perfect. So they won't let you usually go into your locker, but usually if you put a snack or water on top of your locker, they would let you go back to that. And you can just tell them ahead of time, do you mind if I leave water outside? Perfect. Okay. So the government, when the economy is in what they call a contraction, the government, what we're doing right now, okay, they're stimulating the economy by buying treasuries. So we have so on a contracting, they will buy treasuries. Okay. What did you say? Hold on. Okay. Okay. So, Savoy, you can answer that. So during contraction, they're going to buy treasuries and lower the discount rate. So we have the 4 cycles. We have expansion, which is economy's going great. It's going crazy, great. We have inflation. We're worried about inflation. So the Fed is going to sell treasuries to take money away from the dealers, and they're going to raise the discount rate. During peak, it's still going up strong, but it's slowing down. They're still going to still sell treasuries, but near the end of peak, they're going to they know it's starting to drop. So they're going to start buying treasuries from the bank and lowering the discount rate. So during expansion, they sell and raise to tighten. Peak, they kind of just let it go. On the contracting part, they're going to, and on the contracting part, they're going to try to stimulate the economy by buying treasuries and lowering the rates. And then we hit the bottom, it's trough. So it's expansion, peak, contraction, trough. Do not use the word recession or depression unless they say long. So a contraction is the GDP is dropping every quarter, every month. If it's a long one, 2 straight quarters, that's going to be a recession. And if it's 18 quarters or 18 months or 6 quarters, it's a depression. Okay. And they're going to tighten. So they're going to tighten in expansion and loosen in contraction. Okay. Dennis, that's awesome. Yeah. See, I'm telling you that I do think that if you're taking the green lights and you're passing, if you're failing because you're getting tricked by questions, then you should be fine. Okay. Okay. Oh, there you go, Judy. That's perfect. So I do think, I don't know if they still allow it, but they might. But easiest way to do is don't put the shit in your locker, leave it outside. And just do it that way. Okay. Okay. Yeah, so I am telling you that if you leave the stuff outside, you're fine. And I'm telling you, if you're taking the green lights and you're barely passing, but if it's because you're getting the tricky question wrongs or the heavy math or the really complicated stuff, don't worry about it. If you read and go, oh, I knew that, but I didn't know what they're asking, it is. So I explained to everyone, I basically would not get any wrong. If I took the SIE, I probably wouldn't get any wrong, maybe one because I wasn't paying attention. If I take the Notman or the green lights, I might get in the mid 80s to low 90s at best. So understand that their questions are a little more complicated and a little trickier than they need to be. Okay. Okay. JT, which test? Okay. So, and who's program are you using? STC or Kaplan? Or Notman? If it's STC, get over the crunch and facts. Again, okay. So Kaplan, I think they have a thing called trending topics. So here's the thing. So your test is Thursday. That means you have one day. You shouldn't really do any tests tomorrow. It should be about reading and going over the weakest stuff. Maybe a little option quiz just to make sure you're fresh. But here's what I tell everyone. If you don't really want to go, into the reading and it bothers you, I think Kaplan has like it's like a PowerPoint thing. It's a condensed version, kind of like what I told everyone to do on the STC. It's a condensed version of the book. Maybe read that. But if you really don't have that and you don't want to read or watch the videos, create like a really long exam, like 250 questions. Open book where you can see the answers right away and take each question and don't try to get it. Don't care about right or not, okay? Yeah, past perfect, they'll kick your ass. But don't do it to test yourself. Do it to see if you know it. Like set up the questions and right away look at the question. If you can get it, answer it. If you're not sure, boom, hit the question, pick an answer right away and read the explanations. Use it as sort of like a flashcardy kind of day. But I say do 250 so you don't finish it. If you get to 200 questions, you've done too many. But the point is, if you get to that point, just delete the test. Don't worry about your score because it's really about adding knowledge. I do not believe in taking tests the day before because there's no upside. Because if you pass, you're just kind of reinforcing what you know. If you fail, you're going to be in your head and be like, oh my God, I'm going to fail. Past perfect, I only like because it challenges you. If you're passing the past perfect stuff, you should be fine. But yeah, I love the achievable. Again, I have the link in there. I love the achievable. Okay. Yeah, the green lights are hard. They are really hard. Okay. The first green light, you're getting used to new questions and stuff like that. Yeah, that's funny. So yeah, the other thing. So if you're gonna snack, if you're taking the SIE, don't worry about the timing and the drinking. But right, so if you're gonna, you have to build in the fact that if you're going to be in there for 4 hours, you don't want to drink a lot before you walk in, because then you don't want to have to go to the bathroom all the time. I agree. Okay. Again, I think the Achievable is a great supplement for both SIE and the Top Off. The SIE, it's a standalone. You can do Achievable by itself. I'm still waiting for feedback on whether it's good enough for the Series 7 Top Off. But I have 3 people so far that have used it, and they said that's all they use and they passed. But they were finance majors, so I'm waiting for someone who's not a finance major to do it, to tell me if it really helped them. Okay, you know what? It is a little after 9 and my time. Thank you guys for joining in, and I will see you on Thursday.